I am here today to bring you 5 easy ways to make free money. Who wouldn't want that? These are a few different ways I've implemented into my own life that have helped me make thousands of dollars per year in extra spending cash. So I figured I would bring them to you guys to see if maybe one or two of them may work for you. The first strategy that I wanted to talk about is cash back. Now, some people are using cash back on their credit cards, but they're not fully utilizing the potential. You should easily be able to make $1,000 or more per year just based off of these cash back rewards. Most people are missing out. If you're going to a store and you're buying things with cash, you're paying with a debit card or a check, every single purchase that you make and you are not using a high cashback credit card, you are missing out on these opportunities and they're free for you. The key is you can never pay interest on any of your credit card balances. Some credit cards charge you over 20% interest on your balances. You have to be in a habit of paying in full every single month. So if there's something that you want that you cannot afford to pay off at the end of that month, do not put it on a credit card, or else you're going to pay an extreme amount of money in interest that will erode all of the gains that you have made on your credit cards. Businesses are charged 2 to 3% fees on all of the purchases by MasterCard, Visa, American Express, Discover, and then those credit card companies pass those fees back on to you in the form of rewards. So if you're not using credit cards, then you are effectively paying an extra 2 or 3% on all of your purchases. You should be able to earn between 2 and 10% cash back depending on the strategy that you use and the cards that you employ. The more that you want to earn, the more difficult and challenging it can be. So if you just want a simple cash back credit card, the first card that I would recommend for you would be the Citi Double Cash. It provides you with 2% cash back on every single purchase. You don't have to do anything more than that. You just swipe the card and instantly 2% of your money comes right back to you. Now, if you want to get a little bit more involved, there's a bunch of other cards that you can use. I'm going to mention a few of my favorites. My dad actually was the one who originally got me into this, and what he would do is he would actually tape these little notes on each credit card that explained the amount of cash back rewards that he was about to receive. So he would be able to remember which cards to use. So anytime that he handed these to people, whenever he paid for a balance, they would always give him a weird look and question it. So it's something that I remember that's kind of funny, but it's really something that has been tested over time to continue to work, and it's free money that you should be able to take advantage of. Stepping up the difficulty level a little bit, you would move to a 5% cashback rotating category card. There's a few different ones out there, Discover, Citi, Chase, all of them have one. Now these are actually rotating categories, so you'll earn 5% cashback every quarter. It changes every 3 months. Those different categories may have a cap on how much you can earn the 5% cash back. It's a little bit more involved, but it does pay off benefits, and you can bump up your cash back percentage to 3 or 4% overall by using that. The next strategy requires quite a bit more work, and if you do any traveling, these cards are a must. You have to have them. Chase, their Ultimate Rewards program, as well as American Express are the two top companies. Now these cards have very high annual fees, $500 to $600 annual fees, but the benefits more than pay for themselves. The key to bumping up your cash back percentage is utilizing their travel partners. So for airlines, you could use American Airlines, Delta, Southwest. There's a few different international airlines that are available, as well as hotels. You can use Hyatt, you can use Hilton, you can use Holiday Inn. You really have to kind of play a game, and it does require more time and more work, but you can bump up your cash back percentage possibly up to 10% with redeeming through some of these other partners. So depending on how much effort and time you have to put into this is the amount of rewards that you're going to reap the benefits of. Another big bonus of these cards is the intro bonuses, and right now I've seen some of them that are an all-time high. Some are offering up to 100,000 bonus points if you spend a certain amount within the first 3 months. You could redeem that for up to $2,000 in extra money that's free. The other great thing about this is all of this money is tax-free. The IRS considers this a rebate. So they don't actually make you pay tax on this as long as you're required to do something to earn the points, whether it be a payment or reach a certain amount that you have to spend. So all of these are rebates, and you don't have to spend any money on taxes, which is different from some of the other income sources that we'll talk about. The second way that you can make free money is by looking at the different checking account offers. If you're like me and you only use online banking, you rarely ever go to an actual physical location, then why not check and see what offers are available, and you may be able to earn up to $1,500 extra just by switching a regular direct deposit to a new company. You do have to watch out for certain account minimums, all the fine print with the minimum deposits you're required, or else they will charge you additional fees. And most of these banks will let you have accounts opened at multiple locations. So you could have a few different checking accounts that aren't costing you anything. One specific thing that I would want you to pay attention to is if they charge you any fees for closing your account. Some banks make you open the account and hold it open for up to 6 months, or else they charge you a fee. A few banks that I've had experience with are Chase, HSBC, Citi, PNC, Bank of America. All of them at different times will offer some of these bonuses. Most of them are over $500, and it doesn't take a whole lot of time to switch over a direct deposit through most companies, so it might be something that's worth your time to look into. Now, another thing that you want to pay attention to is that your local banks may mail you offers in the mail. So those offers sometimes are better than the ones that you find online. So keep an eye out. You never know. Now, this is different than the cashback with the credit cards. So you will receive a 1099 for this, and you are required to pay income tax on these bonuses. So just keep that in mind whenever tax season comes around. If you did do this, then make sure you follow through and make the payments. The government's got to always get their money. The third way that you can make free money easily is by participating fully in any employer offered incentives. So most employers do have a 401k match. Make sure you're fully participating in that match. So if they offer you a 4% match, make sure you're at least putting 4% into your 401k. That's free money that you're missing out on that they're just willing to put into your pocket. So it makes no sense not to participate in that. Now, if you want to see more information on how to invest that 401k money, then you can check and see the index fund video that I created, and I'm going to put a link down in the comment section. Piggybacking off of the last one, the fourth way to make easy free money is that if your employer offers an employee stock purchase option, so it's called an ESPP. Check and see, a lot of bigger companies do offer this to their employees, and most people don't use it. So what they basically do is they offer you a discount on the company's stock. So it may be 5, 10, 15% off the company's stock, that once you hold it for a minimum period of generally a couple months, then you're free to do whatever you want with it, and you immediately have made 10 to 15% on your money. The longer that you hold on to these stock options, the more risk that's involved. So generally with the IRS, they make you hold it for at least a year, so you're taxed at a long-term gains percentage versus short-term gains. The difference is generally 15% taxes versus your standard income tax, which depending on how much you make could be upwards of 30-some%. So that can be pretty significant, but you are holding on to that risk if you hold it for up to a year. So if it's not a stable company, then you have a chance of losing possibly all the return that you may have been able to gain if you would have sold it for the short term. So that's something that you have to balance yourself, the risk versus benefit, but it's free money. It's a free 10 or 15% return as long as the stock stays level. If it goes up, then you've made even more than 10 or 15%. I would caution though to make sure that a large percentage of your assets aren't in the specific company that you work for. Other products your company may offer are different discounts on cars, on your cell phone bill, on certain products that they have coordinated with other companies. So look into those, look at your HR, or if your company has a website for employees, there may be stuff that you can save quite a bit on that you're missing out on. I do have a fifth easy way to make free money. Now this one here will only apply to certain people, but you need to make sure you pay down your high interest debt before you do any of this other investing. So if you are holding credit cards with balances, that is an absolute no. You have to pay off those balances in full before you invest any money, because those balances are costing you more in interest than you will make on the returns of your investments. Now, what is a high interest rate? So in today's environment, I would consider anything more than 5% as being a high interest rate that you should pay off before you continue to invest. These are risk-free returns on your investments, so you are guaranteed to make 5% or more. Now, if you've been paying attention to what the Fed has been announcing, it looks like they are going to start pulling back on bond purchases, which will affect the interest rates and start pushing them upwards. So whenever the Fed does decide to raise the rates, which is looking like it might be the end of 2022, 2023, you might see an increase in the federal funds rates, which immediately are passed on to the consumer in the form of mortgages or car loans. So I would start checking to see if your mortgage, if you haven't refinanced it yet, you may see a lot of benefit being able to get an under 3% rate if you refinance now before they push up the rates. We're coming to the point where you need to make a decision if you haven't already done so. Secondly, I would look into your student loans. So if you have student loans, I know we haven't had to pay on them for over a year now, but that eventually is going to come to an end. They're going to let that moratorium expire, and I don't see forgiveness coming down the line. They might do a small package, but complete student loan forgiveness, I think, is highly unlikely. So whenever the moratorium does expire and those interest rates kick back in, if you do have loans that are above 5% that are higher interest, I would recommend paying those down first and get yourself in a better financial position before you do start to pump a ton of money into investments. If you do like this video, please make sure you like, comment, subscribe to my channel. I'm going to continue to put these videos out at least one a week, hopefully. And hopefully I'm able to help some people. You can take some of these tips that I may have brought you today and use them in your own life. Thank you.